Very good morning, premium members. It's Jared. Happy to be with you today. I hope everyone's having a great day. We're seeing a lot of wild movement in the market still, so let's talk about what that is and where it's going and where we see it going and all of that good stuff. So let's discuss the details here. Here's the dollar index and how this one is setting up. Remember, this week is just wild, crazy news week, right? And so not much of it pertains to the dollar, the US dollar. Most of this is, we did see a little bit of ISM news, but most of it is New Zealand news and Australian interest rate news and New Zealand interest rate news. We actually saw New Zealand cut rates by 0.5%. That's aggressive. Rates were 1.5%. They were expected to cut it a quarter point. Instead, they cut a half point. So that's a big deal. We saw the New Zealand dollar go crazy and go all over the place. Just a lot of wildness. It's been central bank news galore everywhere on everything, and just really a lot of volatility. Coming up tomorrow, we've got more Australian news, then we've got a little bit of pound news, and then Canadian news. It's all big news too. So there's just a ton of volatility. The markets are all over the place, trying to figure out where to catch their footing. The dollar is doing okay in a bad way, which is good. We want the dollar to be weakening and kind of moving downward here. We have our euro dollar position that we're defending here and trying to hang on to. Our lowest entry is right, right in sight of where this dollar index is going. So we see this, we see this kind of movement happening. We're looking for the dollar index to work its way, hopefully back into these lows, get us down into the 96, 30-ish area, drop about 100 points, and and then kind of make that decision from there. So that's kind of what we're watching and looking for right now. As that. As we watch the dollar index and we watch things like the VIX just does not seem to want to relent here. We had a nice double top that pushed through, closed back below that 23 level, and it's just still bouncing around. This is telling us that, the market is still concerned. It's still uneasy about things. As we look at some of the yield curves and so on, there's a few factors going on there with treasuries, and it tells us that there's still a flight to safety happening here. So bonds are getting bought up, safe haven currencies are getting bought up, and we're just kind of looking for this to take some relief. And so far, it's been pretty intense. Our dollar position. Our euro dollar position is doing good. Our our lowest entry is right back to the entry. So 112.35 is that lower entry, and we're at break even on that guy. So that's looking good. And we're just hoping this can kind of keep pushing. It's interesting. Sometimes the dollar doesn't do this as much. We've seen Swiss franc and yen strength, and oftentimes we'll see the dollar strengthen as well while those guys do that. But the dollar has been weakening, and that's fine. We'll take it. The only thing I'm concerned about here is, we came back and hit some pivots, and that was great. But we've got a weekly, daily pivot combo right here and a big market imbalance right here. And I look at that and I think, okay, we might still be headed down a bit. I'm kind of happy to just let this sit. It was a nail biter through this kind of little area right here. Is this going to hold that 110 and be able to really bounce? And it has, and it's done good. And again, we're back up to a decent area on our euro dollar trade. But we're watching this closely, trying to see where things will go. We've got a nice market imbalance up here at 112.50-ish zone, and then we've got lots of good areas up here to go after. Weekly pivots and daily pivots and some other areas. So I like the euro dollar. It's behaving well. We had an aggressive sell-off and basically a big V bottom right here where it just hit and bounced and went straight back up again. You can see that V bottom is pretty intense on the daily chart. The weekly chart even looks pretty wild. That weekly candle from that hitting that low to now, big bullish candle right here. But interesting lows that have been kind of put in place on this euro dollar, and it's working out great for us, and hopefully it continues to do so. But we're going to be very cautious about the dollar, starting to strengthen if global tension stays high, global economic tension and political tension stays high. So we'll keep an eye on that. So that's the dollar. It's running. It's doing well. We're hanging in there. We have our Aussie Swiss trade that is definitely, it's definitely struggling. But the reason I'm staying with this Aussie Swiss is for the following reasons. Aussie Swiss is sitting at a massive double bottom. I mean, if you look at this chart, some of the charts get a little squirrely. Some of them have real extreme lows, like on this spike down, and on like the the 2008 spike down. They will have a really long wick that goes lower, and this is on this spike down here as well, you'll have kind of some longer wicks. But for the most part, this is a major double bottom. If we just take it for this section and this range right here, it's a major double bottom. This takes us back, at least at, depending on how those other charts look, if you look at Aussie Swiss on Oanda, for example, same on Oanda. If you look at Aussie Swiss on Forex.com, I think we have some different, no? Okay, so for the US, they're all looking pretty good. I think the Aussie Swiss gets interesting with like Saxo Bank. We have these wild, which kind of makes you think don't trade with those guys because there's some big movements there. And if we look at at the ICE here, we're at the lowest point, but they have this big spike down right here, which isn't really registered on any of the other charts. So regardless, we're at the most things considered, we're at the lowest point that the Aussie Swiss has been, according to most of these charts, for a very, very long time or ever. And I hope you guys can kind of see where I'm coming from here. This is why I cannot imagine closing this trade right here, saying, all right, well, this has gone against me far enough. I'm closing this trade out at a really speaking, a multi-decade double bottom. I'm closing my longs here. I can't do that because, we have this Swiss franc safety kind of trade going on where the Swiss franc is strong. But when we're at a level like this, I have to just say, okay, and I say this to you guys as well, if you have to trim your positions to kind of withstand a little bit of drawdown here, it's not the worst thing to do, but and that's something that you may need to consider. But I can't close here because of that major support that we're at. So, we're just trying to kind of ride out these extremes. I want to add another position to Aussie Swiss, but we're just trying to kind of ride out these extremes and make sure that, make sure we're not closing out a long trade at the bottom of an all-time low range. Hopefully that makes sense, and I don't sound like a crazy person, but that's what I'm trying to do here on this Aussie Swiss. We have so many high probability targets up above. We're sitting on this long-term range down below. There's just so many reasons to say, okay, it's time to take a breath. Even amid the all this panic, all this global just currency crisis stuff that's going on right now. We see that stuff take a break, and we see opportunities to, to just trade the charts, right? And right now, the charts are telling us that we're at a major, major low, and that this is an area that we probably want to hang on to for at least the moment. I circled some of the immediate targets going up here to 60, basically 6,900. It's just countless pivots and massive market imbalances, and just these real strong levels that I just feel like we have to trade around here. And so, we've got all these levels, everything's up here. I just think that this is a good opportunity, hopefully, to get a little relief from this Aussie Swiss sell-off. So that's what I'm looking for. That's what I'm looking at, and that's where I hope this thing can behave itself and start working its way back up there. If you look at even at kind of a scanner type setup, I think, some will say it hit there and some will say it did not hit there. If we'll just say it did hit there, our 30-minute chart is getting pretty extended. If it didn't hit there, then the 30-minute chart's getting super extended, and telling us that all of these things are lining up. All these things are saying it's time to get some relief, some pullback. And maybe that happens going into the weekend, maybe that happens going into the start of next week. But this is an area where we say there's got to be some relief. So if you need to trim position size down, don't hesitate. Go ahead, do it. But this is why we're holding on to this trade. This is kind of what we're looking at here. All the Aussie pairs are kind of in the same position where they're all just running against these major lows. The Australian dollar is going to show some weakness, probably further weakness. The Swiss franc and yen are probably going to continue to rally, but there will be some deep breaths in the middle of that, and that's what we're looking for. We're looking for the Aussie Swiss to take a breath and make a run like this, and then possibly continue down. And I won't hesitate to start selling some of this stuff. After we get, some pullbacks here and we get this thing, getting back to something rational, I would trade it down. But for the moment, I'm looking to buy against this all-time low and trade it up further. So, bring that break even down, get another position down here, and then trade it. Get that break even down to, say, 6,700, somewhere in there, and then be able to get out of all of our trades with some amount of profit in that area. That's the hope. That's the goal. That's what we're looking at. But, that kind of just hopefully gives you a little bit of an idea of what I'm looking at there. I am watching, the stock market, and I'm watching the VIX, and I'm watching, 3-month, 2-year, 10-year yields. Things are happening, but there's got to be a little bit of a breath taken here on some of this Aussie, craziness that's going so strong. So that's what I'm looking for in Aussie Swiss. I'm keeping a close eye on it. Like I said, if you need to trim positions, don't hesitate to do it. I like the Aussie New Zealand. We had a pending order. I kind of wanted to just step away from Aussie pairs a little bit, from adding more Australian stuff to the mix. But when we have Aussie New Zealand mixing things together, I think this is a great little setup here. Look what the Aussie New Zealand did. We had a limit order to buy Aussie New Zealand at 103.15. Clearly, in retrospect, I'm very sad about canceling that pending order, but it did spike down pretty violently to about 102.65, and that probably would have been unwelcome additional Aussie exposure. So not too sad about it, but it was a nice move. The Aussie New Zealand is hitting these fairly intense lows down here of the last 4 years or so. That's a positive. That's a real positive candle. That's a real positive candle. I want to buy Aussie New Zealand pretty good. So what I'm looking for here is I want to get a pending, and I'll throw this pending order on. I want to get a pending order on Aussie New Zealand around 104.100 to trade it higher. And we will absolutely start small on this and leave room for this thing to run back down to these lows of 102, 50, 60, and so on. So, start small on this at 104.100 because we're going to be prepared to add to this thing back down there in the kind of range lows and so on. So I'm going to be looking at that and putting a trade on for Aussie New Zealand. So I do like that one a lot. But like I said, guys, we're keeping an eye on everything. As the stock market continues to be wild and crazy, we need to watch how that performs. Here's a chart I posted earlier about SPY, kind of making this run. We've got this broadening channel right here. Here's kind of our support zone. If if SPY can stay above this, then we may see some positive movement starting to happen there again, and so on. But we're just looking for the volatility to calm down, and we're looking for the market to get back to a little bit of normality here, and so that's kind of what we're doing. But these major levels are major levels, and they hold, and they're important, and we want to work with them. And so that's kind of just what I'm looking at. Again, we talked about Aussie pairs, and and so many of these Aussie pairs are at just you guys can look at all your charts. They're at multi-year lows, and that might just continue to push a bit more. Aussie dollar's kind of trying to take out some lows here, but seems to be kind of working its way back. I think we've got the Aussie dollar hopefully headed back up into 68 area. We'll see how that goes. I've been looking for a trade opportunity here, and the Aussie dollar, US dollar does look interesting. We do have a pretty nice little channel here, but I'm being very cautious and careful about adding any additional Aussie exposure right now. I just kind of want to work with our Aussie positions we have, and we'll see how this thing plays out here. But anyway, the Aussie dollar, all the Aussie pairs are obviously very, very pushed to extremes, and I'm just watching these extremes and looking for kind of the reaction that we see. We trade this way every day, every week, every month of the year, and there's a week or 2 weeks or a month in there where it doesn't work so well. But it does the rest of the time. So we don't really, we're not looking to change our strategy. We're just looking to kind of manage things and let the market get back to a little bit of equilibrium and some normality. Okay, guys, that's what I'm looking for right there. I'll have more charts and details coming, and let's just see how things play out.